guys. I think we are live. Hi, Andrei. Welcome back to the channel. And let me just put up the screen on. Hi, Andrei. We are live today.
Hey
So
guys.
thank you so much for coming on the channel. I know that you're an author of a book which is about all about finance, and I've also gone through your channel, which is 1 Minute Economic. Very interesting channel, I must say. You have great content, and there's so much to learn about the financial markets. And I'm glad that you're writing your second books now, which is going to be releasing very soon. I would love to take your opinion on the book as well as the current market scenario. You have been into the traditional market, you already know the stock markets, and already have made some videos on cryptocurrency market as well. And I think you spoke about how banking, there are some kind of flaws in the banking system and all that. So it will be my pleasure to have you right now here on the channel. And everyone who is joining us today, if you have any question, please feel free to put that in the chat box. I'll be glad to pick that up. And before we start, would you like to give a small introduction of anyone who might not know you?
Hey guys, and first of all, thanks for having me on the channel. I basically propagate ideas for a living. Like I teach people economics on the 1 Minute Economics YouTube channel. I write books, and generally speaking, I specialize in making complicated stuff easy to understand. Because like the average person, pretty much everywhere in the world has a really bad economic education on the one hand, and on the other hand, there is stuff that tends to happen on a cyclical basis, like financial crisis and stuff like that. And it's not just something you read about on the news. It's something that affects you. It's something that can devastate your family. And when it comes. You don't have like the luxury of saying, yeah, I wasn't ready, can you come back 6 months from now? It doesn't work like that. Nobody cares that you're not prepared. Nobody's going to care that you didn't know about economics related stuff. So in the end, I kind of try to find the right balance between teaching people things that I believe they need to know. So that's one thing. And on the other hand, doing it in an easy to understand manner. Like, for example, on my YouTube channel, I don't tell people, hey, give me 2 hours of your time each day, because people aren't going to do that. They have jobs, they have families, they have lives. But I can tell them, look, give me, let's say, a minute of your time twice a month, and I'm going to teach you economics. I think it's a really good value proposition. And I'm basically telling people that I'll do my best to teach you everything I know about economics, and I'm going to do it in a way that doesn't put such a huge burden on your schedule.
So you said that a lot of people are not educated on economic. Do you actually blame the educational system in every countries? And I think that's the case with almost all the countries. Do you think there is not much enough education? This is something not taught in schools and colleges?
I mean, it's not necessarily just a matter of of there not being enough financial education. It's also the quality, because I get emails from people all the time who actually majored in economics, and they tell me, they're like, I've spent hours upon hours in a seminar where some bored old economics professor tried to teach me this and that, and it was so boring. I didn't understand the thing, and I couldn't wait for the entire class to be over. And then I watched one of your videos, and I was like, hey, I didn't know it's so easy. So I think it's a matter of quality more so than anything else, because a lot of my peers, a lot of economists love to hear themselves talk. They're like, okay, I'm writing a book about economics, or I'm talking to people on YouTube about economics, so why don't I try to sound as smart as I can? Why don't I throw a gazillion complicated terms around, and then everyone's going to be like, oh, look at this guy, look at how smart he is. What people miss is that the goal here is not sounding smart. The goal here is helping people understand stuff. And this is what I'm good at. This is the type of thing I've pretty much dedicated my life to, professionally speaking. And you know the problem is that it's not even a matter of me being so amazing at it. It's just that everyone else is so bad.
Yeah,
So the bar is not exactly very high, unfortunately.
it's other way around, is it? Okay, I think Deepak says we can't hear you. Shiv, your voice is very low. Guys, I don't think if there is anything wrong from my side. Are you saying that only my voice is low? Can you all hear Andrew's voice? I'm not really sure if there is much that I can do about it because
Maybe
all
it's not a
seems to
matter
be.
of your voice being low. Maybe mine is too high. So maybe I can just perhaps my volume is too high and then yours seems low by
As
comparison.
long as I'm audible, guys, let me know. Right. So, Andrew, coming back to the topic, just let's talk about. I think you are releasing your second book, and you have already released your first book, and I believe that first book is also about financial system, how one should, deal with this changing economic conditions, and obviously, I mean, you would you are the best advocate of cryptocurrencies right now. We about a decade back, we were talking about the economy related to stock markets, related to companies, properties, and whatnot. We have a different economic conditions altogether. Right now, there are no more cryptocurrencies coming up. There are different startups coming up into blockchain space. So all of a sudden, we are talking about a different economy altogether. So why don't you talk us about your last book and the next book that you're going to be releasing?
Yeah, well, both of the books are available right now. The first book is basically Wealth Management 2.0. It's what it's called. You guys can find it by searching for Wealth Management 2.0 on Amazon, on iBooks, Barnes and Noble, Kobo. It's available in a lot of places. Let me just show it to you real quick. It's basically the only personal finance book out there that's written specifically for people who earn a living online, so for example, for freelancers, for people who run online businesses, for people like the two of us, for example. And I've written it because I'm on the one hand, I'm an economist, so I have the academic credentials, necessary to kind of convincingly get a message across. But on the other hand, I'm an entrepreneur myself. I'm someone who earns a living online himself. So basically, I've kind of combined the two in a way that gives people economic advice that comes from someone who actually is in their situation. I'm not an economist who lives in an ivory tower. I'm someone who has a degree in economics and all that, but who has also been earning a living online for a long, long time. So basically, that's my value proposition with my first book. The second book, it's available right now, but I would recommend that you guys wait until August to buy it. Like, let me just show it to you as well. It's called The Age of Anomaly, Spotting Financial Storms in a Sea of Uncertainty. Right now, it's priced at about $10. But if you wait until August, I'm going to reduce the price all the way to just 99 cents for a week, so as to generate as much buzz around it as possible, so as to, get a good rank on the platforms I'm advertising it on and stuff like that. And also, I'm going to have a contest. Like, I have a lot of prizes, from something like $100 in Amazon credit to 50 hosting packages, 15 hosting plus domain name packages. So it's going to be a great contest as well. So I mean, it's not like $10 is a lot of money, but you'll be able to get it at just 99 cents if you buy it in August. Basically, I've scheduled this discount week to be from the 6th of August, which is going to be Monday, to the 12th of August, which is going to be Sunday. But just in case something pops up, I mean, if you guys just head over to 1 Minute Economics, you can search 1 Minute Economics on YouTube. You're going to find me and subscribe. Then you're going to be kept up to date. And when the contest is live, when the discount is live, and so on, you guys are going to know.
Yeah, I've actually put the link for your channel in the description below, so you can go ahead and watch,
Perfect.
have a look on that, and talk about. So I think your first book is more about the traditional finance, right? I think when you wrote your first book, that does not include cryptocurrencies topic. Does this?
Oh,
book
it does
include-
actually. It does.
It does.
Actually, since it's a book about personal finance written specifically for people who make money online, I've actually made the case that compared to, like, I don't know, a 60-year-old person who has been working in the brick and mortar space his entire life, someone like the two of us, people who earn a living online, for people like us, it makes sense to have more exposure to what I call exotic assets. Like, for example, cryptocurrencies, since we're on the topic now, or another example would be domain names. I specialize in that as well. I think I'm actually the only economist who talked about the short domain mania of late 2015 to early 2016. Like, I'm actually an economist who specializes in these exotic assets. So in my first book, but in the second as well, I've covered them. In my second book, however, in The Age of Anomaly, I went a bit in more detail. Like, for example, I've talked about Bitcoin in a bit more detail. I've talked about the short domain mania in a bit more detail, the dot-com bubble, all sorts of other stuff. Like basically my second book, since it's actually called The Age of Anomaly, it's more geared toward understanding financial anomalies in general, right? Like it's a book that people read if they're worried, like if they're worried about what's going to happen to them after the next financial crisis hits, if they're worried about, whether or not they're financially resilient enough. So basically what I do in my second book is I take things in a lot more detail when it comes to financial calamities, and I tell people, look, here's what happened in the past. Here's what we can learn from what happened in the past. Here's what you should do to become better at potentially spotting the next financial crisis as soon as possible. And finally, I'm honest with people and I tell them, look, I'm an economist. I think about these things each and every day, but it's still very possible that the next financial crisis is going to catch me by surprise as well. So I focus just as much energy in my book on telling people how to become more financially resilient in general. Or in other words, instead of saying, hey, I know exactly what's going to happen, I know exactly when it's going to happen, and here's what you have to do, I tell people, look, it makes sense to be more financially resilient in general so that basically whatever happens, you increase the likelihood that you're going to land on your feet. If you're financially resilient, then even if the next financial crisis catches you by surprise, you're still going to be in much better shape than the average individual. So basically, those are the two dimensions. One, becoming better at potentially spotting the next financial crisis as early on as possible. But two, understanding that you might not succeed at it. So spending just as much time and energy becoming more resilient.
So we had a financial crisis in 2008, and that is where the cryptocurrencies and Bitcoin, the whole thing started. Now, so do you see a financial crisis? I'm referring to the traditional market coming soon, because it's been more than a decade. A lot of economists and a lot of experts actually predicted that the dollar market, the stock market, even the Mike Maloney, you would know him. He
Oh yeah, the gold silver guy. Sure. The guy with Hidden Secrets of Money, I think.
Yes, yes,
His
yes.
document. Yeah.
Yeah, so he keeps talking about that how this dollar market and the stock market are going to be collapsing, and in this scenario, people should actually bet on on the real money, which is gold, silver, and now interestingly, he has added Bitcoin in that category. So how much would you agree to that, and how do you see cryptocurrencies being a savior from this financial crisis, traditional financial crisis?
Now, at the same time, I agree and disagree with Mike Maloney because, like, let me just give you an example, right? Like, let's assume we'll call him Alex. Let's assume Alex watched a bunch of documentaries in 2011 about how the monetary system is in trouble, and it is, about how the economy is in trouble, and it is. So we'll assume that Alex watched a bunch of documentaries and became very worried, right? So in 2011, when gold was in the 1900s and silver was at $50, so high, considerably higher than today, he was like, no, I'm worried about what's going to happen next. So I'm going to sell everything I have aside from my house. I'm going to sell my stocks. I'm going to sell domains if I have them. I'm going to sell everything and invest in precious metals. The problem is this, and a lot of people make this mistake. Fundamentally speaking, they're right. Like, is the monetary system in trouble? It is. Is the economy in trouble? Yes, it is. But there's one other thing they have to keep in mind: timing. Because Alex made the mistake of investing everything he had at once, even if for the right reasons. And life happens. What if 2 years from now, so in 2013, something happened, like Alex had a medical emergency or something else that made him need a lot of money quickly? In that case, ironically enough, he quote unquote protected himself so well in 2011 that he ended up losing 60% of what he invested in precious metals because he was forced to sell in 2013. And this is what I tell people. Like, the market can remain irrational longer than you can stay solvent. A lot of people say this, and so many people say it that it becomes demonetized. It's like a lot of people know it, but nobody really internalizes these things, And what I'm trying to say, and this is valid when it comes to Mike Maloney, Peter Schiff, fundamentally speaking, they have very valid reasons to be concerned. The problem is, if you get carried away, if you allocate too much of your net worth in one direction, even if you do it for the right reasons, then yes, you will eventually be proven right. Like, for example, Alex might eventually be proven right and silver could end up at, $500 an ounce. Of course. The problem is that due to an improper strategy, you can lose most of your wealth by the time you end up being proven right. So the key here is looking for results more so than being right, because a lot of people make the mistake of assuming that those who lose money as a result of bad financial decisions, they think those people lost money because they were wrong, which is false. Most people who lose money lose it not because they were wrong, but because their timing was off. And that's why I tell people, like, they ask me, should I invest in precious metals? I say yes. Should I invest in crypto? Yeah. Should I invest in stocks? Of course. What I'm telling people is that the key here, without going overboard, of course, is being diversified within reason. Because if you have exposure to more asset classes, you can recalibrate. Like, life can happen. Maybe if you need money for a medical emergency, if you are prudent enough, you actually had a fund set aside for medical emergencies, and therefore you didn't have to sell your stocks or your crypto or your precious metals and so on. This is the key. People need to understand that there's a very fine line between preparing and thinking about the future, which is what my second book is all about. There's a very fine line between that and getting carried away and betting the farm on just one outcome. And this is the mistake a lot of people make on YouTube. There's a lot of bad advice floating around on YouTube because people bet everything on just one outcome. Like, they know we're going to have, for example, very high inflation. And of course, there are valid reasons to believe that eventually we are going to have very high inflation. But if that inflation is preceded by deflation, which is what Mike Maloney says, for example, since we're talking about him, if that, for example, happens, then it won't matter that you were right about the high inflation, because during the deflationary period, you're going to lose so much money that even if you will eventually be proven right, you still won't be happy about it. Right. This is the key.
So, Andrei, tell us, what are the so one is cryptocurrency. So you're talking about diversification, not putting everything into one bucket, right? So
yeah.
So what are the three categories that you would like to mention apart from cryptocurrencies? What are the other things that you would like to refer for a good planning? Like other two things, like it's a precious metals like gold and silver, bank or property, or what kind of that?
Well, right off the bat, we need to understand that whatever you invest in, you're taking a chance. And I don't mind risking. I mean, both of us are in crypto. We know what that means. We know what it does to your sanity. So I don't mind risking money. I don't mind losing money. But I do want to be properly rewarded for the risks I take. So for this reason, for example, right now, I wouldn't touch bonds. I wouldn't touch bonds, not because I have something against the idea of investing in bonds, no, but I feel that I am not being rewarded enough for the risk I take on. So it all boils down to finding kind of like a right balance between things you consider attractive. So they have to be attractive and they have to be priced at a level that leaves enough upside on the table, So with that in mind, I, for example, I'm pretty big on real estate, local real estate over here. The idea, especially since I live in it's the second largest city in Romania. It's an important university town. So people do very well by investing in real estate on the one hand, and not just waiting for capital appreciation, but also making money through by renting out their property, and since it's an important college hub, university hub, there's a lot of demand even for small properties that are cheap to acquire, kind of like college dorm sized properties. There's a lot of demand for them and people can do well with that. But of course, real estate is highly location dependent, But if you live in an area where you think there's potential, and also if you live in an area which has a good track record of respecting property rights, because if someone lives in a politically unstable country where you're only a regime change away from losing your real estate, I'm much less likely to recommend it. But if you see the potential there, I'm pretty big on real estate, especially real estate that has the potential of generating some cash flow for you. Now, of course, if there's going to be a financial crisis, your rent income is probably going to take a hit as well. But when the big one strikes, when disaster strikes, the name of the game is not necessarily making huge amounts of money. It's surviving. And by having real estate, you have something. You have something tangible. You have something that people want. Like even in a financial crisis, people still need a roof over their head. So I'm big on real estate.
Yeah, yeah. Got
I'm
it. Got
also
it.
I'm also like the idea of looking at all sorts of markets in with the intention of finding solid opportunities when it comes to stocks. I'm all for it. But again, it doesn't mean you should buy stocks right now. You can wait. But the name of the game is like, okay, you have stocks, you have real estate, you have crypto, you have domain names. You have, like, I've given 4 examples of things I consider investment grade. So at the end of the day, it all boils down to making your own list and then monitoring the markets every now and then. And if you see that something's on a discount, if you say that, for example, let's assume there's a 30% crash in the stock market, and you say, okay, at this level, I think it's fair to have some more exposure to stocks. So you buy, you continuously basically recalibrate your strategy, because this is what it's all about. And just one more thing I want to tell people, because the number one question about personal finance that I get is people asking me, okay, I don't have that much money at my disposal. What should I invest in? And of course, if someone comes to you and says he doesn't have a lot of money, it would be stupid to recommend real estate, right? So I tell those people that the best investment I know by far, and I mentioned this in both of my books, the best investment I know by far is investing in yourself. Like, for example, if you're a photographer, this can mean investing in some courses that help you become a better photographer. It means investing in equipment. And basically, by doing those things, those investments are going to pay dividends forever and ever and ever and ever. So it's just amazing how great they can turn out to be. So don't underestimate the people say, okay, because just like with the market can stay irrational thing, it's so widely said that it loses its meaning. But I cannot stress this enough, because if you invest in yourself, a lot of investments that you make don't have an expiration date on them. So you invest in yourself today, and you're going to take advantage of dividends for the rest of your professional career, maybe. So an investment that you make today, if you look back 30 years from now and see just how much it paid off, I think you're going to be pretty happy with the ROI.
Well, definitely, I think that's a very good point that you mentioned, because if you are good enough, if you have good skills, you can generate cash flow anytime that you would want. So I want to pick up some questions from here. The volume is low. I'm really sorry, guys. Uh, Now, okay. Dinaka says, Andrew, how do you see the institutional investors coming into blockchain space? Is there any change in the economics because of the crypto?
This is a great question. And people talk about, for example, Bitcoin's market cap as being huge. But what they need to understand is that Bitcoin's market cap at 100 billion ish at this point or so, it's huge for people like us. Like, for example, the two of us, if you have an extra $2,000 lying around and you want to invest in crypto, the Bitcoin market cap, Bitcoin itself, is a large enough space for you to comfortably park 2,000, 10,000, $50,000. So for people like the average personal investor, it's great. But when people say institutional investors, they need to understand that Bitcoin is such a small market at this point at 100 billion. And keep in mind that 100 billion is the market cap. But realistically speaking, just think about what would happen if JP Morgan or Goldman Sachs would say, yeah, I'm feeling like parking $5 billion in crypto. So let's just buy 5 billion worth of crypto right now. The price would skyrocket, or the same way if someone were to sell 5 billion worth of crypto, it would not be pretty at all. Let's not even talk about that. So people think that, 100 billion is a lot, and 100 billion is a lot. But what I'm trying to explain to them is that there's still plenty of room for growth. If we're talking about something that has the potential of being adopted by institutional investors, because right now at the current liquidity levels and at the current market price, the Bitcoin space in particular and the crypto space in general is so small that, yes, you have institutional investors that are opening up trading desks. You have institutional investors that are beginning to show interest. But at this point and at these levels, they're just basically dipping their toes in the water. This is what people need to understand. Like, is Bitcoin attractive enough for major allocations of capital from institutional investors? No, because speaking of whales, as people like to call them in crypto and other places as well, they would be too big of a whale. Like, nobody wants to be that guy where you're so huge that you can basically just ruin a market just by pressing a few buttons. So for crypto to be attractive for huge institutional investors who actually want to allocate significant capital in this direction, it would have to grow quite a bit more.
Right. And so Dinaka says, yes, same strategy can be implemented on crypto. Great thoughts on timing. You mentioned something about time, and Deepak says that's a great thought. The timing is makes a lot of difference. So now, what we have noticed recently is over the last 6 months that the market has not behaved the same it used to behave earlier, about for the last 3 years or 4 years, starting from January 2018. The market has been going down and it's been quite stable for last 2 to 3 months. uh, and there was a recent post on the medium about the cartel buying and cartel manipulation. So before we wrap up, I want to take your opinion on what do you think about cartel buying. Do you think there is some sort of manipulation going on with the crypto market?
Look, first and foremost, the most important rule is that when you're investing in something, you need to be aware of what you're investing in. Like, when it comes to crypto, you have the potential of making a lot of money. You have the potential of investing in something innovative. But you cannot only expect to take advantage of the pros without understanding the cons as well. And the cons are, to a large degree, uh, they tend to revolve around the idea that we are in the Wild West right now. Kind of like people who invested in domain names were in the 90s. We don't know all that much. It's a new space. Regulators are just starting to get accustomed to it. And yes, there is, of course, or let's just say that crypto is a far more attractive and easy target for manipulation than other more established markets. Like, if you want the huge potential upside, you have to live with this. This is how things stand right now. But of course, that being stated, like, people, when talking about crypto whales, they tend to think of them as these entities that can never lose money, that have it all figured out. But no, at the end of the day, whales are only market participants. They are bigger market participants, and of course, their actions can, in the short term, generate huge responses by the market. But and at the end of the day, my best guess is that if you want to have this narrative, that it's all a big conspiracy and that price evolution is just a conspiracy, of course there is one element. There are some conspiracy related elements to it, but for the most part, just like other traders, whales tend to trade within the trend. Like, of course, they can generate short-term fluctuations. They can, for example, hunt stop losses. They can do these things which make the average trader lose money, of course. But for the most part, I think it's safe to go under the assumption that, just like in other markets, even if crypto is more prone to manipulation, whales trade within the trend. So if the trend is down, they're going to be short-term. They're going to have they're going to be more willing to short intermediary tops and stuff like that. But to say that, for example, whales are here to manipulate prices long term, or whales have a vested interest in doing this or in doing that, no. There are several whales, sometimes with conflicting agendas, and just like traders are imperfect, whales are imperfect as well. They're just as likely to lose money. Sometimes being a whale is a good thing because you can influence the market short term, but sometimes it's a bad thing because you cannot just move around as freely as you and I. Like the two of us, for example, can trade small positions however we see fit. Like, if we make a small trade of, a Bitcoin may seem a lot to us, but in the grand scheme of things, it's nothing. But this means we can move around freely. If we buy a Bitcoin, if we sell a Bitcoin, nobody's going to notice. Whereas if you're a whale and you do something, people are going to notice. So in a way, what people need to understand when it comes to whales, in my opinion, is that this being a whale comes with pluses and minuses as well.
Right. So Dinakar, I have a question. It says that a lot of people actually follow a strategy for mutual funds and fixed deposits, like maybe monthly recurring. He wants to ask whether the same strategy you can implement for cryptos. And also one last thing that I wanted to ask you is, Andrew, that a lot of economists actually predicted that sometime in the future the fiat money will be replaced with the cryptocurrencies. How much do you think, is there a truth? Do you think that happening in the future?
Okay, so the first question was I know a lot of people love the idea of dollar cost averaging in crypto, and of course it's something that can work. I have nothing against that, but as an economist, I do have to tell you that when it comes to research, which compares dollar cost averaging to lump sum investing, I've actually had a video about this. Not so long ago on 1 Minute Economics. Like, we have papers written all the way in 1979 by Konstantinidis, for example. We have stuff published more recently by Gerstein, Fisher and Associates, which shows that even if dollar cost averaging tends to be popular because it gives people peace of mind, lump sum investing is more research backed. And therefore, if I were to if people ask me if they should dollar cost average, I'm going to be like, okay, of course, if dollar cost averaging makes you comfortable enough with the idea of investing for you to say, okay, I'm going to take some money out of the bank and invest, then it's a huge victory, right? But at the same time, I do want to stress that. Just 1 second, please. At the same time, I do want to stress that if you're interested in what has been proven to work better, then lump sum investing is superior to dollar cost averaging. So that's the first dimension of your question. The second dimension is, it's funny because a lot of people ask me something like, are governments afraid, are central banks afraid of Bitcoin? Are governments afraid of Bitcoin? And I tell them that from a central banking and government perspective, something like a blockchain is the best thing that ever happened. Like, if I were in charge of a government, or if I were the head of a central bank, I would be so excited of the prospect of moving on to a digital form of money, because you have this problem in India, like for example, with the attitudes of the powers that be when it comes to physical cash. It's very hard to track physical cash. It's very hard. Like, if the two of us exchange a physical bill and just, I pay you this physical dollar bill, you do this service on my behalf, it's very hard to track that. Whereas digital money, like blockchain related cryptocurrencies and stuff like that, what is the blockchain at the end of the day? It's a huge public ledger, which means that it's easy to keep track of who sent what to whom. So whenever people say that, oh my God, central banks and governments hate crypto, just ask yourself, if you were a government official or someone from a central bank, wouldn't you love the fact that more and more people will be spending this digital money that's a lot easier to track than physical money? I think you would, like, it's not, there are just as many, if not more, reasons for governments and central banks to actually be excited about blockchain technology. So, yeah. So if you're talking about, is there the potential of the future being that of the blockchain? Of course, it's too early to say right now. Like, when it comes to cutting edge technology, it's hard enough to say what's going to happen 2 years from now. Who knows what the landscape is going to look like in 50 years or in 60 years? So it's a fool's task right now to kind of make a long-term prediction. All I can say is that among central banks, among governments from all over the world, there is a huge trend and the shift of mentality. More and more officials want money to go digital, because as far as they're concerned, digital money is easier to tax, digital money is easier to control. And from that perspective, yes, I would say that some form of digital money is the future for sure. Now, will it be blockchain related? It's hard to say because technology is all over the place. Who knows? But yes, the future, without a doubt, in my opinion, is that of digital money.
Thank you so much for sharing that, Andre. So yes, I think so. The right way would be to have a good amount of diversification, maybe into real estate, maybe into crypto, maybe in stock and bonds, and not really put everything in one bucket, because there are uncertainty, and there's no one who can guarantee that this is definitely going to work. So the right way is to definitely diversify. Okay, I think a lot of people would not be able to hear me anyway. So I think we would like to wrap up this session. Before we wrap up, anything that any last thing that you want to share? You want to share anything about the book before we actually end up wrap up this session?
I mean, about the book, I only want to say this. It's not a book that I've written for the money. It's like the print version, which is it's huge. It's 400 plus pages, and you guys are going to be able to buy it, which I recommend in August for just 99 cents. You know, it's not like I'm doing this to make a lot of money. What I am, however, trying to do is to garner as much support for my work as possible. So, for example, if you end up buying the book in August and you like it, maybe it would certainly help me a lot if you could tell a few friends about it. Or if you like my channel, 1 Minute Economics, if you think I'm doing good through my work over there at 1 Minute Economics, then again, a Facebook post takes a few seconds to write, but it's so hard to explain to people just how much it helps, because you write a post, you invest a few seconds to write it and then to press a button, but then so many people see it. Maybe out of those people, some will like my channel and they're going to spread the word to other people and so on. A lot of people make the mistake of saying, yeah, I'm not that active on Facebook, I only have a few friends, or I only have a few Twitter followers. And I keep repeating, like, if you want to support someone, please do your best to spread social media love, because even if you think it's not a big deal to just write a quick post on Facebook or something like that, it helps tremendously because it propagates an idea. It propagates it to so many people, and then it can that idea can end up propagated throughout their networks as well. And it's such a huge compounding effect that it's just amazing. So
Great.
that's pretty much it. I'm looking forward to having you guys on at youtube.com/1 minute economics. And I'm going to do my best to be on the channel again during my big week. So if you subscribe to 1 Minute Economics, then either way, you're going to know. But I'm going to be on again to remind you guys. And I'm looking forward to it.
Yeah, thank you so much, Andrew. And I have some comment from Deepak saying that thank you so much for sharing your knowledge. Is thanking you,
Thank
and
you, guys. Thanks a lot, guys.
I definitely request everyone in the chat box to go ahead and check out 1 Minute Economics. I have put the link in the description below, and I think this is an amazing channel. I'm sure if you have loved this interview like this, I'm sure you're gonna like the whole every content on the channel as well. So thank you so much, Andrew, for coming up on the channel today. It was my pleasure having you. I wish you all the very best.
Thanks a lot for the warm welcome, guys. Have an awesome day.
Thank you so much. See you.